Last week, on the 12th of July, we got the latest US CPI, so US inflation reading. And as you can see on this chart, the year-over-year headline inflation has decreased to only 3%. Well, so it's fantastic, isn't it? Let's see. If we look at this chart, we can see that in the last year, the inflation was kind of skyrocketing. It was going very high and it peaked in June at 9.1%. It was mostly due to the energy prices and commodities prices. But in markets, nothing goes straight up or straight down. So, of course, we have this retracement now, this reaction. And if you look here in what happened in the 70s, 80s, it was kind of similar. Inflation went very high, then it went down, and then again it skyrocketed even higher. So right now, when we analyze the recent inflation read, we need to understand what is causing the inflation to go down and what can happen in the future. Is there reinflation ahead of us, or will we stay at this low 2-3% level? Firstly, let's look at the recent inflation reading. What caused this change from the headline inflation from 4% year over year to 3% is basically the base effect. So it was nothing unexpected. Basically, in June 2022, you had a very high month-over-month increase in inflation of 1.2%. Now, because of the base effect, we exclude this change in this year-over-year inflation read. So we are looking at those 12 months excluding June, and this is what caused the drop. And it's also quite clear if you look here at what we get from the CPI bureau is basically, as you can see, that in June the month-over-month headline inflation has increased by 0.2. Now, as explained before, due to this base effect, we got this drop year over year from 4% to 3%. Now, if we come back to this chart for a second, as I was saying, this rally here in inflation was caused by commodities and energy pricing. Now we see very large disinflation or even deflation because we have negative prices in those sectors, and it's also very visible here. So we have this energy sector year over year negative 16.7%. However, all other sectors are still quite hot. So if you look at the year-over-year change in core CPI, which is the headline CPI excluding volatile food and energy prices, it's 4.8%. Now in the next months, we won't have this base effect, which we had in those recent reads. So as you can see in July, the month-over-month inflation in July 2022, it was 0%. So now we will really see what will happen in the next inflation read. And as I was saying, in 2022, we had this spike in inflation because of energy and commodities prices. Now what is hot is not energy anymore, because we saw the negative year-over-year prices there, but the other part of the system, which is the services. And in order to have low inflation on the forward instead of reinflation, firstly, the energy prices and the commodities prices needs to stay low, and secondly, we need to see some disinflation in the services sector and food. If we don't see it, then sorry, we will face reinflation. So now let's look at the future performance. So this is the month till date performance on the market, and as you can see, the S&P 500 is here, 1.4%. The Nasdaq, so the technology index, is here, plus 3%. And what you see above, this canola, silver, lumber, platinum, orange juice, palladium, crude oil, heating oil, this is the reinflation which is coming. And what's causing this reinflation? Well, firstly, you have dollar, which is currently bleeding. And why the dollar is bleeding? Because basically the market is expecting that the Fed has done its job, that the inflation in US is solved, the problem will not come again. And as the commodities prices are priced in dollar, weakening dollar will cause commodities prices to reinflate. And the problem here is that other countries are slightly lagging in the fight against inflation to US. So the expectation is that in other major countries, there would be more rate hikes than in the US. But this is still yet to be seen. Another factor is that you have this very strong stock market rally currently. On Friday we got the consumer sentiment, the University of Michigan consumer sentiment, and it also came higher than expected. It came at a very high 72.6 level. Also, the financial condition index, which is tracked by Goldman Sachs, has also fallen to lowest levels since August 2022. So the financial conditions are easy. The consumer sentiment is very strong now. You have also stock market rallying, and this all will also lead to reinflation, because you cannot have both eat the cake and have the cake. Even then, at a glance, we have a super nice headline inflation year-over-year reading of 3%. I would advise you to be cautious, because nothing goes straight down and straight up. We are in a critical moment where the base effect is gone, and what caused this massive disinflation, so the energy prices, would also be gone together with the base effect. So the core CPI is quite hot. We already see some reinflation in commodities sector if we look at month till date. So let's see what the future will bring to us. One thing that we can be certain of is that the Fed, on their next meeting, will raise the Fed funds rate, so the interest rate, by 25 basis points. And let's see. The next inflation reading would be extremely interesting. That's all what I wanted to cover today. Thank you. Please like, subscribe, leave your comment, and see you in the next video. Bye.